There we are. Welcome, everyone, to another episode of NFA Live. Another Thursday, another episode. We are joined, as ever, by Ben from Into the Cryptoverse. Hello, Ben. Good to see you.
Good to see you too.
And, of course, Rob. A pleasure. Good to see you. And, of course, Rob from Digital Asset News as well. Hi, Rob.
Hello, gentlemen. Thanks for having me back.
Good to see you. Good to see you. Chaps, first order of business is this comment from Angel. Be nice to Guy. You've got to be nice to me today. I don't know whether that's directed at you two or whether that's directed at the other people in the comments, but let's just establish this before we go any further. Okay. This applies to everyone involved in today's truth. Just be nice to Guy. Okay. So today I thought, like the past couple of weeks, we've talked quite a lot. We talked a lot of macro stuff last week because of the Fed and the rate cuts and what have you. A lot of it was very kind of focused on what's happening in the US and with the US economy. And I thought we'd just do a little bit of a gear change this week, maybe look elsewhere. So I want to talk a bit about China today. I want to talk about sort of there's a little bit of sort of fallout from Token 2049 in Singapore the other week. Crypto bros sort of up to their tricks in Singapore. So I thought we'd just talk about maybe a little bit about sort of perceptions of the industry. Like, are we asking too much? I also want to talk about this is something I personally find fascinating. These sort of old crypto wallets waking up. I'd love to get your guys' takes on that, and what you think might be driving that, because it seems to be happening quite a lot now. And then to finish off, I want to ask you about your plans for world domination, if nothing else, which I'm sure are many in detail, but we'll get to that. So, okay, let's start off. I just want to pull up a headline because this China has been sort of making the crypto news a bit recently. They're basically stimulating, whilst the Fed are cutting rates, obviously 50 basis points last week, which grabbed all the headlines. China is also turning on the money printer, and this is apparently the biggest round of stimulus since the pandemic. Multiple hundreds of billions, kind of being injected to juice the markets, juice China's economy. So I'd love to get your guys' thoughts on that. And is this something that is necessarily particularly relevant to crypto? Obviously, the crypto media is getting kind of excited about it because whenever a money printer gets turned on, especially in a large economy, that is cause for perhaps celebration, albeit maybe premature. But yes, I just want to know what you guys think about China and its, this latest round of stimulus and perhaps its possible effect on the crypto market. Rob, do you want to lead off on this one?
Yes, my favorite part of the show, a little macro. So I will just say, it's always good when it's good for us as far as like for crypto and digital assets when we see that there is the money printer going on, and it's not just us. America's good at a couple of things. Let's see, owning weapons, guns, obesity, and of course quantitative easing. So we're really good at printing money, but I didn't realize just how good China actually was at it as well. And there's a graph that I sent in there, Guy, if you could throw that up. This is from Y Charts.
Yes.
And I got to tell you, I had no idea that China was this gung-ho on money printing. This is the Chinese M2 money supply. And we can see that actually, as far as like month over month, it's about 0.5%, but from year over year, they've increased their supply of, it says right here, 6.31%. So I can only go back 5 years on this one. I'm sure if we took a look at 10 years and even maxed out, it'd be the same thing that we would see like with this website, where MC Money Supply again goes in a straight up hockey stick. Now, I will say that we did a pretty reasonable job of running up the money printer. We took a little bit of a decrease, but we're back at it again, baby. We're back at it again as far as printing, and that is good. That is good for the liquidity process, macro environment, to see us have a little price appreciation for crypto, digital assets, mostly Bitcoin. We'll see how that translates. I know that of course, with this going up and we hear about it, maybe next week we'll hear about China banning Bitcoin again, and that'll crash the markets. But for right now, this looks pretty good. And it is amazing though, isn't it? We talk about the 4-year cycle. Some people say how it's actually, 4-year cycles are through. I did watch that video that you guys did over there, Guy, with Nick. It was interesting about the 4-year cycles, but it was correct. It was correct, especially about the sentiment. But it's amazing how things are kind of lining up going into 2025, and here we go. So that's what I see. I mean, I see it as a positive. I mean, we'll see if the entire economy collapses maybe in a year or so, but I see it as a positive.
Yeah. Yeah, it is fascinating, isn't it? Like, I mean, I've been sort of, I wouldn't say bearish on the 4-year cycle, but I've sort of been just sentiment has made me kind of skeptical. And you think, well, maybe this time is different, but it does seem to be lining up. It's kind of spooky. It's just, it's just trying to square that with the lack of sort of wider sentiment in the market. But yeah, so far, I mean, we seem to be heading in that direction again. And who are we to complain about that? Ben, macros one of your big strong points as well, and obviously you've talked a lot about the Fed and what it's been up to with regards to the crypto market. Do you see China as kind of an important factor in all of this? I mean, I suppose maybe it's always going to play second fiddle to the US, but is it something we should be paying a bit more attention to, do you think, when it comes to crypto?
Yeah, probably. I mean, I guess liquidity is liquidity no matter where it comes from, right? Yeah, I think a lot of that stuff will definitely have at least short-term effects on the markets. I mean, China's been doing this stuff for years where they'll do something, the market will sort of bounce for a little while, and then if there's any signs of weakness, they'll do it again, right? Actually, one of the I can share my screen here. Let me see. So yeah, here's like Alibaba. I've been following this one for a while because it looks like it's sort of building out a base, and you would expect that some of the stimulus would help some of these stocks the most, right? And it kind of looks like it's sort of coiling up here, ready for another move back up after forming a fairly large base over here, right? I think I definitely think that what China's doing does impact the markets. One of the things that I look at quite a bit is net liquidity. So this is basically the net liquidity indicator. I don't know if it's going to actually show up on the screen, but the net liquidity indicator, here it is. This actually takes into account not only China and the Fed, but also Europe, Japan, New Zealand, Australia, Canada, the UK, right? So it's the ECB and the UK. So it actually takes in quite a bit there. So I think it definitely makes sense to sort of add all those together, the balance sheets from all those central banks, add them together. And what's really fascinating, and I've talked about this a little bit before, is that if you overlay net liquidity, which obviously one of the big contributions to net liquidity is China, right? I mean, obviously it is China. That net liquidity and all Bitcoin pairs tend to track pretty closely, right? So like if net liquidity is going up, which includes China, then altcoins tend to do better on their Bitcoin pairs. If net liquidity is going down, then altcoins tend to do worse on their Bitcoin pairs. So I think it's kind of interesting because there are times where the Fed is reducing the size of their balance sheet, like they have been for the last 3 years, but there's sort of intermediate times within that where net liquidity is going up. But how's the net liquidity going up if the Fed's reducing their balance sheet? It's because it's made up of more than just the Fed, right? It's made up of other central banks, and out in in the East, they've actually been increasing the size of their balance sheet for a while rather than reducing the size of it. So yeah, I absolutely think that what China's doing is important. I think that what the Fed's doing is probably what the markets care about the most. At least the markets were mainly following. But that doesn't mean that what China's doing and what other places are doing won't have any effect. And China right now is basically fighting I think a deflation problem. I think they're really trying to get things moving over there. because it's just been relatively deflationary for a while. So I don't really blame them for what they're doing. I think also not just China, but also you have to include the fact that we basically have a global easing cycle underway, right? I mean, not only is the Fed cutting rates, and they're if you look at their jargon since the last meeting, they're making it seem like, and I think it's probably the most likely scenario, that they cut 50 again, in November. And so you basically have a global easing cycle underway as well. So yeah, I think it all contributes, and we probably should focus more on just the Fed.
Okay. Yeah, it's interesting because when I was sort of doing a little bit of research around this, one of the facts that I sort of remembered or uncovered afresh was that in the US, obviously, I think we've talked about this on the show before, but like the US, and I'm sure other Western nations, has record levels of credit card debt at the moment. There's trillions and trillions of dollars, which is one of these things that sort of always concerns me a bit. Especially when it comes to crypto. Where's the spare money going to come from when people have massive credit card debts? But China is fascinatingly kind of the flip side to that coin. Chinese citizens apparently have something in the region of $30 trillion worth of savings that the government is sort of desperate for them to spend. But because I don't know, I mean, I guess it's kind of a cultural thing as much as anything else. But they don't. So China, yeah, and I guess that ties in with what you were saying, Ben. It's kind of deflationary more than inflationary. But yeah, it's fascinating how China sort of has this opposite problem. It's got all this capital locked up. And the government there is sort of desperately trying to, induce Chinese citizens to go and spend it a little. Come on, guys, just go out and live a little, buy some more property.
It makes sense. I mean, if you think, like, if we thought the dollar was going to be worth more tomorrow than today, we would want to not spend it either. That's one of the reasons why people invest and they buy things, because that if you hold on to the dollar, it's going to depreciate. Whereas if you buy something else, maybe it won't. So that's one of the reasons why, some inflation can help stimulate spending.
Right. And yeah. I will say it always surprises me about people who get into investing, because when I think everybody kind of comes into it and they get into some kind of specific niche, whether that be equities, securities, or whatnot. But like when I just take a look at it, I'm like, why don't people get more into assets? And that I think is the biggest advantage. If you can buy certain assets, whether that be precious metals, whether that be real estate, whether that be land, things that will actually appreciate, and of course, Bitcoin. Like when I look at this and people, like I talk to my friends and different people, they're like, well, you should get into this stock or that stock. I'm like, why wouldn't you just get into assets, like really hard assets? Because I don't know where the money's going to go. I don't know what the price is going to do. I don't know what inflation is going to do, but I can tell you this. Usually if I get into assets like the precious metals, like the real estate, like Bitcoin, price goes up. And I'm pretty happy with that. And that is my hedge against inflation. I just don't understand why people just don't see that. It's just weird to me.
Yeah. People can have some strange priorities, I guess. I think the other thing worth mentioning in relation to China and crypto is that the popular sort of myth is that the Chinese government banned crypto entirely a few years ago. It was back in I think 2017 was sort of the big year for that. But actually, and I wish it was still on CoinDesk, there was a fascinating article on CoinDesk by Emily Parker that they've taken down now for some reason. But sort of it went into this in detail, saying that actually China hasn't banned Bitcoin, it hasn't banned crypto, and weirdly, like a huge amount of hash power of the hash rate, Bitcoin mining hash rate, comes from mainland China. But crypto trading is done there. It's just kind of frowned upon, and it's not very easy to do. The government doesn't necessarily approve of it. But to say that it's banned, and to say that Chinese citizens on the mainland can't get hold of crypto is a myth. And actually China, I think, is Binance's biggest market.
Yeah, I've heard that too. I've seen that too. And even like I have some people who are from China, like they'll get around the Great Wall by using a VPN, And I'll ask that question, like, how can you guys do that in China? Because I hear it's very difficult. Like, no, there's just certain ways that we have to do things. So yeah, it's a funny thing, but yeah, like you said, hash power, and if China is the biggest users from Binance, the largest centralized exchange, it's something to be said.
Yeah, yeah. So yeah, I think China is a factor in this upcoming, in this cycle, perhaps that we've forgotten a bit in all the excitement around the Fed and 50 basis points of rate cuts, and maybe another, as you said, Ben, you seem to think that there might be a consensus around 50, not next month, in November.
Yeah, I mean, I think the hard part for the Fed is they already showed their hand. They already showed they're willing to cut 50, and if the unemployment rate continues to go higher, which it probably will, because that's what it's been doing for the last 6 months pretty aggressively, you have to wonder, how do they not cut 50 again if the unemployment rate is still going up? But yeah, I mean, if the unemployment rate comes back down, let's say it comes back down to like 4.1% or something, then maybe they won't. I think the other sort of thing that makes you scratch your head is initial claims today came in again really low, like 218,000, and it's got to make you wonder, like, what's the long of the yield curve doing so far down if initial claims are so low? Does that mean the long end has to correct for maybe a policy mistake by the Fed? I don't know. We'll see.
We will.
Gold certainly seems to like the easy cycle.
I think all-time high.
Yeah.
Yeah, it's crazy. Rob, from what you were saying earlier about assets, I think Makis has a good answer here in the comments. People want everything and they want it now. I think that's a big factor in why people don't buy assets, or why a lot of people perhaps new to investing don't buy assets, because they don't. That idea of buying something and holding it for a very long time, which is generally, unless you're looking to sort of actively trade assets, that is what you do. I think that is a struggle for a lot of people. They want to flip a profit ASAP.
Yeah, you know what? There's this meme that's been going around with the game Monopoly. I don't know if you guys remember that great classic game. And it says right here, this is what most people do. They go around in life just like going around the board game of Monopoly, just to get $200 to get spend when they actually land on other properties. You can be those people that just go around and just work for money and then just give it to all the property managers, or you can actually start to own assets. And the majority of people will do that. And just like Maka said, they want everything and they want it now. And that's why like on our channels, I see people are more patient because they understand it's a long game.
Yeah, it is a long game, but the rewards are to the patient rather than the swift. Okay, let's move on. I think before we look at what was sort of going on in Singapore, I actually want to stick with China a little bit, because I think this ties into what we want to talk about here. So quite recently, we've seen some very old, and I mean sort of really old, Bitcoin and Ethereum wallets waking up, by which they've been dormant since for years now, and suddenly waking up and starting to move Bitcoin and ETH around. In fact, I think if you can see the headline there, from Network's earliest months, sending BTC to Kraken. Now, this sort of obviously kind of happens periodically, and because we've got such good on-chain tracking tools, now that the likes of Arkham Intelligence and Look on Chain and stuff are so good and at keeping us in the loop. We see this quite a lot, but I think it's a fascinating phenomenon. So I'm just curious to see what your take on it is. Who do you think these people are, and why now? Rob, do you want to lead off on this?
Sure. I was just taking a look at there's a metric called whale shadows. And what it takes a look at, it just shows you when Bitcoins that have not moved for many years, and it shows you when the most of them are actually moved around. And it's on I just popped up a chart if you want to throw it up there. And this is over at Look into Bitcoin. It says Pro, but this part is actually free. And when you take a look at it, you can differentiate between Bitcoin that hasn't moved for 10 years, 7 to 9, 5 to 7. And what I want to do is let me just take out the 10-year and a 7 and 9 year. And you can see, like, I know people, and as it goes up, you know, this of course is the price of Bitcoin. But, well, first of all, I have to stress that even though people are moving Bitcoin, doesn't mean that they're actually selling Bitcoin. However, I will say that if I have my Bitcoin in my Ledger device, I don't move it just because I have nothing to do. I move it because I'm going to sell it. But that's not for everybody. Some people could say, well, I'm going to move it into a multi-sig wallet. I want to move it into a safer place. But again, these are just movements. But if I can take a look at this, I can see, like, this is 5 to 7 years. So these haven't moved for 5 to 7 years. And what do you notice? The majority of time when people are selling, it's not at the very tippy top, but it's not, of course, we can't go over here. But it's as things are going up. This is the 5 to 7 year chart. And, like, even people will say, well, you know, these guys who got in early, they're not smarter than you. They're not better than you who are watching the video. They just got in early. That's pretty much it. They timed the top? No, the majority of people for the last cycle, they sold at 38,000. They didn't sell like at the very, very tippy top. And that's just how it is. But then I will say like this, like, and this will even bring it home even 10 years plus. When did the majority of people who haven't moved Bitcoin for 10 years plus sell? They sold it at this point, which was when Bitcoin was 15,778. So I don't know why they decided to sell at that point. I think if you had it for 10 plus years, you're like, well, obviously, Rob, you know, they've made a bunch of money. But yeah, but they could have, you know, if we talk about it and we say, like, you know, this is the hardest asset, and if you got into it early, you held it for a specific reason. I don't know why you didn't sell until this point. But if you did, you probably did it at this point to say, well, I made a pretty good gain from, you know, 30 cents or whatever it was to this point. But I just wanted to show this to people because, like, when I got in, there was a big talk about diamond hands, sell, never sell, hold on forever. And I don't care if you're homeless, you just hold on to your Ledger device and that'll keep you warm overnight. And I was watching, it was on a podcast with Saifuddin and Michael Saylor. And they went back and forth, and you could see like people will say, well, Ben's a Bitcoin maxi, Rob's a Bitcoin maxi. Actually, never say that about me, but you can see like the maximalism, and you can see how there's a vast difference between, like, Saifuddin is like, no, you should only accumulate and never sell and just keep stacking sats, to somebody like Michael Saylor is like, you have to at some point get yield, or else it's a product that is non-bearing. And you have to do something to get this yield. And I can see like a different dichotomy between the two ideas. And that's actually shows you right there with those charts that people will tell you diamond hands, but they're going to dump on you. They're going to sell. And just remember that to take profits as time goes on.
Yeah. Wise words.
Yeah.
Ben, do you think it's something that occurs to me about these? And I mean, you may have a theory on what sort of entities these may be, you know, whether they're sort of just people who, like, bought early, or maybe early miners or whatever. But do you think perhaps some of these people were sort of holding out for, like, a world of sort of hyper Bitcoinization in 2024 that obviously hasn't yet materialized, and perhaps this is them kind of throwing in the towel? Do you think that's possible?
I don't know. I mean, I feel like there's a steady stream of this stuff, right? Like, it's not like it just started. It seems like every month, you know, there's some old wallets waking up for whatever reason. And as Rob said, just because they're waking up doesn't mean they're selling. They could be moving it somewhere else, you know, to a different wallet. Maybe they want to do something else with it. It's always possible that they're selling. My guess is that they're just really early, you know, miners or people that got it super early. Maybe they were the people that were using Bitcoin for more nefarious purposes back in the day. But whatever the reason, it's nothing new, right? Like, we've seen this stuff every month basically for years and years and years. So, yeah, I don't really think it's out of the ordinary. As far as I feel like I have to comment on this whole Saylor thing, because I just think it's funny because, you know, he's going after this idea of yield. And I think, like, in and of itself, people want to seek yield, right? Like, it's not a bad thing to seek yield, especially if you're sitting on billions and billions of dollars. That yield could be worth a decent amount. But I also think it's like, all right, well, if your bear case for Bitcoin, what was it, like 12 million in the next, like, by in the next decade or something. If your bear case is like 12 million a coin, like why do you even care about the yield? But I do think that there are both sides have points to that. I mean, I'm a little worried about going down the yield rabbit hole with Bitcoin. It just seems like a great way to set up another really bad catastrophe,
Yeah.
But at the same time, like I get where Saylor's coming from, because it's a lot of money just to sit on an asset. And I think, you have to imagine like the last half year, Bitcoin hasn't gone anywhere, it's basically just been at 64K for the last like 6 months. So I get where he's coming from, but it's a risky business. Yeah. As going back to the wallets, I don't really think there's any rhyme or reason why they're stirring now. Exactly. You could come up with 1,000 different reasons. Maybe they want to move their crypto somewhere else. Maybe they want to sell their Bitcoin or Ethereum and buy something else. I mean, life comes at you. Maybe they want to go buy a house or something. And what better way to do that than if you had put something in a really risky asset a decade ago, and now it's worth 1,000,000% more than it was back then. That's one way you can finance that stuff. So I don't know why they're moving it, but I tip my hat to them for getting in early and reaping the reward.
Yeah, that's true.
Absolutely. Yeah. And of course, back in the day, if you were mining Bitcoin in the days when you could just do it with a CPU and you could just do it on a regular laptop, because then then Bitcoin Pizza Guy found that you could do it more efficiently with a GPU, and that's kind of started the arms race. But of course, in the early days, the block reward was 50 BTC for each block that you could mine. And there were only a handful of people doing it. So, you can see how some of these people must have accused. And I guess, you look at someone like that and it's like, well, obviously, well done to them for being early and stuff, but also just for having, I guess that's a reward for curiosity as much as anything else, isn't it? Because it must have been, it had no value. It would have been impossible to imagine that it would ever, I think people were staggered when it got to $1. Let alone, when it started breaking tens of thousands. So I guess these people, so many of them did it with no sort of, I guess, probably not much in the way of financial gain in mind, just to support the experiment and to see what happened, and, out of sheer curiosity. And good on them. they've reaped those rewards.
Yeah. And I will say, like, those people back then, we look at them and go, that's, I mean, we know the real story, because we can't just say you're lucky, but people from the outside looking in are like, those guys are just lucky. Pizza Guy just, of course he sold his, but the other ones that mined it and they had thousands of Bitcoin, they're just lucky. And I'm sure, they're like millionaires right now. No, most of them lost it, sold it, and that was it.
Yeah, imagine buying Bitcoin at like 10 cents and then not selling it at $1,000 in 2013, and then not selling it at $20,000 in 2017, and then not selling it at $69,000 in 2021. And I mean, most people are going to have sold it long ago because they would have already become like, deca millionaires by holding it, a much shorter time than selling it today.
Yeah. And, well, I know one guy that did that. His name's Simon Dixon. We all know Simon. And he's, very staunch in his ideals, which is, I just want to have more Bitcoin at the end of the month than what I did at the beginning of the month. And then like, just to fast forward, like everybody who's watching this video right now, in 10 years, people are going to look back and go, those guys were so lucky. I mean, Bitcoin was only 60,000, whatever the hell it is today. They're so lucky to get in there, and it probably was so easy. Right. So we'll see how it all works out. Hopefully Saylor's base case, whatever, I think Ben said $12 million for the bear case.
I don't remember.
I'll take
it was in the millions though.
I'll take it.
Yeah.
Even if he's halfway right.
Yeah. It's a good point you make, Ben. I've seen other people make this as well. It's like, if you're expecting this asset to appreciate so much, I think this applies a lot to particularly altcoins that you can stake at the moment. Okay, you can stake this for say 7%. Like, okay, but you expect it to go up like 20x in the next few months. Right. Why bother? And especially when you factor in all the risks around. Well, I guess there are risks around staking, but also if you want to catch that, if you want to try and catch that top, some of these cryptos you can wait for. I mean, I think Cosmos cryptos, you have to wait for about 21 days or something for them to unstake. By which point that that market top is gone. It's on the downward slide again.
I guess the argument is like, just because he has a certain amount doesn't mean he doesn't want more, right? I mean,
right.
Why sort of cap what you could get? But I also think there's not really going to be, because I believe I saw that interview, and I think he was talking about like the risk-free rate, right? The risk-free rate with like, you could buy a T-bill or something. And actually that's in your Sharpe ratio. If you're calculating out a Sharpe ratio, your risk-adjusted returns, you subtract out the risk-free rate, which is essentially what you can get from like a 2-year treasury bill. But in this case, it's not, I don't think there's going to be, I think the idea of a risk-free return with Bitcoin is just not something that's going to exist, right? Like Bitcoin is a much different asset than just buying a T-bill, So I think that's kind of the question. It's not that like people don't want more yield. Obviously people do, but if your bear case is, millions and millions per coin over the next decade, why would you risk any of that for just getting another 5%, And
I think this comes down to the individual investor who wants to take that risk or not. Like, to me, I look at, and I think some of the people in the comments will agree. I look at like a T-bill and I'm like, oh, yeah, that's adorable. 4%. This is great. But then I look at, I'm like, why? Am I even keeping up with inflation? And I look at that and I'm like, why don't I just roll this into other assets? And for me, it is. But I remember Mark Cuban talked about this specific thing. And he said, why would I do anything risky when I can just put, $50 to $100 million in a T-bills and just sit back and do nothing? It's risk free. And I was like, well, that works out for you, but not so much for everybody. So I guess it's everybody.
It depends on how much money it is. Yeah. If you're Mark Cuban and you can just throw like $1 billion into a T-bill. And you can earn, like $50 million or something really easily, or whatever, whether it's 100 million, a billion, whatever. Like, I mean, that's one thing. And maybe Saylor's doing it too, as maybe he's suggesting it like as a hedge. Maybe that's why he's trying to suggest that. I don't know, but yeah, I mean, if you're putting $1 billion in, I mean. Yeah, I guess that's quite a lot of money that you're just leaving on the table for Saylor if the market's just going sideways. Because like I guess the argument is how many billion? I mean, how much? I don't even remember how much Saylor has in it, but I mean, think about how much that much money could have given you had there been a yield, right, over the last 6 months. But I think the problem is you can't have both. Like, you can't have the risk-free yield and also be exposed to a very, an asset that is prone to going several 100% or several 1,000%, but also dropping 70 to 80% at times.
Yeah, but doesn't it make sense that he would? I mean, I understand why he'd want it. I understand why he talks about yield, because it's good for the average individual. Like, if you can, and for me, I'm not going to do it. I've already learned my lesson with Voyager and Celsius, so no thanks. But I mean, if you want to do these other type of products, that's great. And the retail investor, if they can get yield, if he sees it and he knows, okay, well, if I can give them yield in some way, shape, or form, that means they're going to hold on to Bitcoin longer. If they hold on to Bitcoin longer, that's good for me and my company, MicroStrategy. And that's good for MicroStrategy. That means the stock goes up. And if the stock goes up, that means I can take bigger and bigger loans against it, which is the whole thing with buy, borrow, die. So if I can do something like that, and people can hold on to Bitcoin, then we win. And then that's Saylor. But Savadin over here is saying, no, it's not how. You just have to stack and go from there.
Right. Well, the problem is what happens if you have all this Bitcoin, if you're someone's like, loaning it out or whatever, and then Bitcoin drops 80%, then what happens? And everyone
margin called.
Yeah. Exactly. No, I think that is basically the risk of like, do we really, as an industry, do we really want to go down that route and risk something, huge falling out? Because again, it's not going to be anything about a risk-free rate when it comes to Bitcoin. I think, anyone in the past who's thought that there was risk-free with crypto has basically always been proven wrong.
That's true.
I just think that you have to be careful about, thinking about crypto and yield in any way that saying that and risk-free in the same sentence just doesn't really make a whole lot of sense. But
well, okay, so I'll ask Guy this same question. So I think this is what's going to happen. This is my opinion. I think as we get into the bull market, things get crazier. Those types of products that Ben just warned about are going to come to fruition, and they're going to be out there for people to go, oh, I want to do a loan. And then margin calls come on and everybody gets suckered in. Not suckered in, but everything crashed. Guy, you've been here longer. Do you think that's going to happen again? Or do you think that people are going to learn? And I will say before you go over this, if it wasn't for like you two guys and like some of the older YouTubers out there that explain these things, I think people were just going to fall into it like lemmings. But is this going to happen again?
I think it can. Yeah, I think it can, because I think, people, people get this idea of earning a yield on it. They forget, what we were talking about. This idea that, well, if you think it's going up so much, why do you need 5%? I think a lot of it comes from, like, I was talking about this in our Discord group yesterday. I think it was, like, I think a lot of this comes from people feel a need to do something. Like, I think the current market conditions we're in at the moment, I think, is a really good example. There's a lot of altcoins out there that have been just in the toilet for a long time, and now they're starting to come up out of it. And a few people are going to find themselves with positions that are profitable for the first time in months. And I think one of the dangers that people fall into at this sort of time is to think, okay, now I must do something. They sell out of that position, they take a small profit because they're like, I've been underwater for so long. And it's actually like, well, what's changed? Has your conviction from when you originally bought this changed? Has anything other than the price fundamentally changed? And I think the same thing applies with things like yield. The idea of just putting your crypto, putting your Bitcoin, your Ether, whatever, on a hardware wallet and leaving it for months, possibly years, I think is quite difficult for a lot of people to cope with, because you feel that you should be in more in control in some way. You feel that you should be putting that asset to work. So long story short, I think people will make those same mistakes again, and it's our job as people who've been through this to warn them off it, and to keep saying, like, look, don't chase easy yield. There is no such thing as a safe yield in crypto. That's just the nature of the beast.
Yeah. Wow. Wish I got to talk to you back in the day, Guy. You could have helped me out.
Well, but I mean, I think we didn't see a lot of this stuff coming as well. Like, I mean, it was, you look back and you think, wow, we really learned that the hard way. I think you do ask questions, like we've all said, sort of, where's the yield coming from? But I mean, one of the sort of really kind of heartbreaking things about that bit in the last cycle was that, people like FTX and Celsius, they managed to fool people for such a long time, because they had good, people like Majinski and SBF were kind of good marketers, weren't they? Or they were characters who were able to sort of project an image of, we know what we're doing, with these savants or whatever, and actually they were just nothing but crooks. But unfortunately, we learned that lesson too late. So but it's one thing to make a mistake once, but to make it twice, that's the crime, if you like.
Yeah, that is the crime.
What's the saying go? Fool me once, shame on you. Fool me twice, shame on me. And by the way, one last thing, I mean, about yield, if there's a product like FTX, I feel like was harder to spot. But some of them were like Luna was not as hard to spot, because like when you're getting yield on like a stable coin of 20%, right? Like if it's a lot higher than anything you could find in TradFi, there's a good chance it's a scam, right? And it can go up for a long time before people realize it's a scam. And I think that's what people fall into. They're like, well, it's going up, it's over $100 a coin, and how can it be a scam? And then a week later, it was less than a penny. And I think, I mean, that's what you have to be careful of. I mean, it's one thing if something's giving you, 3 to 4%, maybe a little bit more. But if you're looking at something and it's giving you 20%, 25%, I think that should be raising red flags. Because if you can't find it in TradFi, they've been doing this a whole lot longer than crypto has. If you can't find it there, why should you expect to find it in anywhere else?
Because Ben, you hear the stories about the meme coin traders who are like, you know what, I just made, life-changing money on this, tomato cat coin. And then, you see like, well, here's Luna. And this is, I think it's just like the stories that get people into it. And you're like, then you get suckered in. And that's the problem.
Well done, Rob. You've just made the tomato cat coin community's day. So
it's coming.
I'm sure I'm sure they'll be delighted about that. Okay, let's move on. Let's talking about the sort of underbelly of crypto, if you like. So Token 2049 was a couple of weeks ago. It's already feels like in the past, and there were quite a few stories I saw of and stuff on Twitter about kind of the crypto bros out there in Singapore misbehaving themselves. A lot of fairly kind of wild parties and money kind of being thrown around. And I saw a sort of few takes along the lines of like, we should be better as an industry than this. This isn't what Satoshi envisaged or anything like that, which I think there's definitely something to that. But my question to you guys is it reasonable to hope for better standards from our industry? Are we, should we be trying to hold ourselves to a better standard, or is this just a symptom of money flooding into a system and, I guess, in a way, corrupting it? I mean, you could say that certainly parts of the crypto industry have been corrupted. So, am I being, are we being a bit too head in the clouds, hoping that we, maybe the crypto community could be a little better than this? Ben, what do you make of this?
Look, I'll try to stay optimistic and think that, I think we could be better as an industry. I definitely think we could be. I think, I do think there's a large, money does, it can corrupt. Doesn't have to, but I think it certainly could. And I think that, a large part of our industry now has just gone to throwing all your, a lot of people just throw all their money into meme coins. They try to pump them up, and then they throw these crazy parties and celebrate, and they just keep on doing it. I wonder if a lot of people in crypto are fairly young, right? I mean, I think a lot of the people are going to be like millennials, for the most part, as my guess. Maybe some Gen Z, maybe a little bit older than millennials, but I think a lot of people haven't, a lot of people that are around, my age, plus or minus 10 years, haven't really experienced hard times. I think, in the sense of really struggling to find jobs, right? And the job market has just been so great for so long. I mean, the unemployment rate has been, with the exception of the last few months and the COVID spike, basically it's just been in a downtrend for over a decade. And I do sometimes wonder if that's kind of how the business cycle works, at the end of it. And as you get near the end of it, this is what it's like. There's just so much money to be had. There's just, there's so much excess liquidity that it's just flocking into meme coins, from one meme coin to another, people just throwing tons and tons of money. And then one day the party's over and we have to get back to real jobs and actually, how do you make society a better place? Is it just YOLOing into meme coins, or is it providing value in some other way? So I do think it's possible for us to get to better standards, but I think it's going to be hard to do that without hard times in between. And I don't think anyone knows when those are going to come. Maybe they come next year, maybe 2026, maybe 2027. I don't know, but whenever they do come, that normally helps help clean up the space. And we have it every about 4 years or so. Speaking of the 4-year cycle, right? Every 4 years or so, there seems to be some type of a cleanse in the market. So yeah, I think that's something. And also I think sometimes when I look at, I don't know about you guys, when I look at my YouTube stats, it's mostly just guys, right? 95% of my audience is male. And I think part of that is because honestly, I think women are not really treated that great a lot of times in the industry. And perhaps we could all do a better job in the industry of being better there as well.
Yeah, yeah, very true. And that actually, as you mentioned that, Ben, that was another thing that I saw on the Twitter timeline as well. You know, a few women who'd been at Token, basically saying, yeah, the crypto bros were, you know, some of them were not very well behaved at all, which is really disappointing. You know, at this sort of far into crypto cycle. Um, Rob, I was wondering, like on this sort of note, because I guess one of the things that's happened over the last year or so is the likes, you know, TradFi is coming kind of more and more into crypto. You know, BlackRock is a big sort of name in the crypto industry now. Do you think maybe sort of things that the kind of culture of the industry will change if, you know, people start showing up to crypto conferences with like BlackRock, you know, BlackRock name badges or anything like that? Are they going to have to come in and sort of get the rest of us to behave?
No, I'm going to tell you why. Because I know we focus on the negative part of our industry, and Ben had great points. However, I'm sure most people here have Netflix. Go to Netflix and go watch a documentary called Dirty Money, and you'll see a lot of the different egocentric, despicable practices that are going on in traditional finance. And there's also, once you watch that, there's a documentary on hedge funds, and you'll see just how disgusting that market is. So I know that we focus on, we hear negative parts, and there are negative parts, definitely, but they are, I believe they pale in comparison to what traditional finance has done. And there's a lot of different examples that you can go up all the way to JP Morgan, the things that they've done as well. So I know that we have a long way to go, but I will say TradFi still beats us in that regard.
Very true. Very true. I've just finished reading a book called The Trading Game by a guy who claims to have been the most profitable forex trader for Citigroup. And some of the stuff him and his buddies on the desk got up to, you know, when he first started working that. Yeah, I felt like I had a hangover after reading it. It made me feel a bit ill, but yeah, it's not just crypto, that's for sure. But it's a shame. I guess it is a bit of a shame that, you know, some of those kind of, if you like, TradFi values have sort of leaked across into crypto. But I guess that's what happens when you put a lot of young, mostly men, together and give them too much money.
Yeah, it's like the old adage, hard times make strong men make good times make weak men make hard times. And it's a cycle that keeps repeating over and over again.
Yeah. Okay. Well, all right. Well, I want to move on then to the sort of final point, because we've talked about we've talked about sort of all the, you know, what this money sort of flooding into the industry can do. So I just want you guys to imagine the upcoming crypto bull market turns you into billionaires, and I mean, it could happen, and I want to know, after taking care of yourselves, your friends, your families, etc., your loved ones, if you like, what would your project be then? Is there any sort of, you know, is there anything that you could see yourself working on if you had, or devoting your life to, if you had kind of unlimited funds, or, you know, a huge amount of money as a result of crypto? Ben, I'll start with you on this one.
Yeah.
I think I would try to become a chess master.
Oh, really? Nice.
Yeah.
Oh, yeah, because obviously that's something that's still a big part of your life, chess, right?
Yeah, I play it every day. Like, I usually, like, one of the first things I do in the morning is play like a couple of blitz games just to get the neurons firing.
Yes.
Yeah, no, I really like it. I don't have a ton of time to like study to get better, so I've just kind of been the same rating for the last like several years. But yeah, like if I weren't doing anything else, I would also want to spend a lot of time with the family and stuff. But obviously, you know, if the kids are in school and stuff, and I'm not working on any specific other thing, like I think it'd be kind of cool to do that. Mainly because I've played it like for almost my entire life. I started when I was, I think, in second grade, maybe. And then
Wow.
I would play my brother, but then I got a lot better than my brother. And so the way that I would entice him into playing the games, I would be like, all right, I'll start without a rook, or I'll start without a queen, and then that would get him to play. And then yeah, no, I played a lot. I was the first kid in my middle school to beat my 7th grade teacher, so it was fun. I was
Nice.
I was president of chess club in high school, so I get to wear that badge of honor. Yeah, I think I would try to actually get really good at it. Because the funny thing is, like, there's actually a really big difference between like where I am and like the best player in the world. Like the difference between me and the best player in the world is probably higher than me and someone who doesn't really know how to play at all, right? Like that's how big of a skill gap there is between someone like me who sort of casually plays and someone who's like actually really really good. There's just a huge difference, so I think that'd be kind of cool. To try to figure out if I could do that.
Yeah. Is that so? Do you think that's something like? Do you think you could get to, if you had the sort of time to practice, and I guess the ability or the opportunity to sort of play against better players? Do you think that you could get to, like, I don't know, grandmaster status or master
No,
status, whatever it is?
I think so. The highest I've ever gotten is around like 1900 elo. And I
Okay.
think so to put that in perspective, like someone who sort of knows how to vaguely play, like maybe they play barely, but they know how to play. They're probably around like 8 or 900. Someone who's probably, if you're kind of better than most of your friends, and you can just kind of beat the average person on the street, you're probably like 1200 to 1300.
Hmm.
So I tend to range between like around 1700 or so. Sometimes I'll go up to like 18, 1900. But in order to become like an international master, which is probably what I would try to go for, I think I would need to. It's more than just elo. I mean, you have to win certain tournaments, but in order to win those tournaments, or in order to beat the people you need to beat, you probably would need to be around like 22 to 2400 elo. So I'd have to add, several hundred elo points to my rating. But it's kind of like crypto, actually. Like how the higher the market cap, the harder it is to go higher for that coin. That's the same. It's the same way with
Yeah.
elo. Like it's exponentially harder to go higher and higher. So it's a lot easier to go from 1000 elo to 1500 than it is to go from 1500 to 2000, and it's exponentially harder to go from 2000 to 2500. So
Hmm.
yeah, like I think I would just try to get to like 2300 or 2400, which is going to be, I mean, honestly, I probably couldn't do it if I'm being honest, but like that, I would try. I would at least give it a go and see if it's possible. Cause I mean, I've gotten to 1900 without really ever taking any formal chess lessons or anything like that.
Hmm.
So I'm like, all right, well, maybe if I got someone to actually teach me, certain things, I could probably add at least a couple hundred points. So I think that's what I would try to do. I would just try to become an international chess master.
It'd be great. It'd be great is because during this bull market, I'm pretty sure that Ben's channel is going to hit 1 million. So once he like steps down from this channel, he's just going to turn it over into like a chess channel, like he's talked about. Imagine having, yeah, right. Imagine having a chess player. First of all, I think it'd be cool if Ben did that. Like, hey, I got this far, and this is what I'm learning. This is what they taught me, and now I have 1 million people to listen to me. Not everybody's going to go into it, but I think it'd be pretty interesting to see the progression from there. And 1 million plus subscribers for a chess channel off the bat. Be
And
hilarious.
all these other chess streamers, like, who the hell is this guy? And why does he have 1 million?
Yeah, yeah, he must have
But
bought him.
actually, there are chess streamers who have millions of subscribers. Actually,
No
there
kidding.
are. Yeah, definitely.
Chess
Uh,
dominance.
yeah, yeah. No, I would not be the only YouTube channel with more than 1 million subs. There's actually some that have several million subscribers.
Wow. Wow. So, well, to everyone watching, if you go to Bitcoin 2025, or indeed any other crypto conference for that matter, and you see Ben sitting at a table with a chessboard in front of him and a sign saying "Play me for one Bitcoin," do not Do not take that bet. Do not take that bet. He will hustle you. One last question on it, Ben. I think this is so fascinating. But do you have like loads of different boards and sets that you play with, or do you just have like one that you've had for years? Or
I don't know if I have any down here. No. Yeah, I just have a couple upstairs. Actually, I've gotten to the point where, like, last night I took my kids to, like, my two older kids to, like, a cafe, and they had chessboards, so I was trying to show them how to, the older one I've already taught him some, but I was teaching my 5-year-old last night how to play chess. So I think it's more so I feel like I'm getting to the point where I'm teaching them how to play, rather than focusing on me getting better. There's actually, I'll leave you with a famous quote in the chess world, and I don't remember exactly how it goes, but it's basically like a good chess player is a sign of a gentleman and a scholar. A great chess player is a sign of a wasted life.
That's right. I've seen that one. That's true. That's funny.
Oh, that's great. That's great. Well, Ben, I mean, we like you as a gentleman and a scholar. But let's see. Who was that? American chess grandma? Was it Bobby Fischer? Who was just who was a genius, but an absolute psychopath and a wreck.
Yeah.
No, dude, I've done tournaments before where I'll, like, when you really get into it and you're playing tournaments and you're like, it's stressful, they're like 3 hours long, you start dreaming about chess pieces, right? And like the moves on the board, you'll like, it'll like be in your dreams. It's crazy how much that stuff can infiltrate your thoughts even when you don't want them to.
Yeah. Amazing. So Ben will be, when Ben's a Bitcoin billionaire, he will be there working towards grandmaster status, no doubt, with a golden chess set, gold and silver chess set. Rob, what about you? If or when you become a crypto billionaire, what would you devote your life to then? What would be your legacy project, if you like?
Well, first, I hope everybody finds their purpose, just like Ben talked about. Because if your purpose and if your desires are so well focused that you start to dream about it, then I think you found the right place. So I can see Ben doing that. For me, so like if I have $1 billion, what a waste. Quite honestly, like, I mean, my kids are fine. They don't really need too much. So it's like, what do you do with all that money? I don't need too much. I already have enough. I feel so. Like for me, it's of course it'll be the charities I give to already, like with Protechos, which are giving, they're building or restructuring rooftops in Puerto Rico, and for the economically disadvantaged, we'll say. And then the other things I do with the animal shelters. But I think the big thing, I always feel like you should leave the world a little better than what you left it, right? So I was listening to this. There was a podcast. It was Joe Rogan, and he had Chamath Palihapitiya on, and he was talking about compute and AI. I never thought of it this way, but he said, he gave a statistic, and he said, do you know how many people get after they have cancer surgery to get cancer taken out? How many of those are botched surgeries where they don't get everything? And Joe's like, I don't know. And he said, it's 30%. 30% of those people, they miss the margins. And of course, if you leave anything behind, especially if it's malignant, then it'll just keep spreading. So the people that go through those surgeries, then they have to go back again and get another surgery. And out of those surgeries, he goes, there's another 10% chance that they don't get everything, and they got to keep going back. He said, what if he could just take, and he talked about how in the future, and he says, not that far away, 2 years, 3 years, 4 years, where you have like an AI assistant, and they can tell you which part of the margins are actually there, instead of having to send it all the way to the lab to differentiate between cancerous and non-cancerous cells. And he goes, then you can start to save lives, and you can start to do more things. So like when I heard that, like I thought to myself, well, there's AI, I think is going to be a bigger play. So I would dump a lot of funds into those AI plays. I know people will say that's kind of ridiculous, but I think that's how you actually improve the entire world, just in that regard, just in that little small sector. And then just think about all the other things. So for that, I would probably go there that way, as opposed to or as also doing the charities. But again, like it comes down to how much do you really need? in life. And for me, I don't really need much.
Yeah. Well, I guess that's the that would be the great thing about having that sort of, that amount of money, and that you could make positive change in other people's lives, because, as you say, like, you'd only need a tiny fraction of that to cover all your needs for the rest of time, really. So it's about what you can do with it, that would benefit other people.
Right. And there's one last thing about this, is that with AI is great and it's making progress, but the biggest constraint right now is, and Sam Altman talks about this as well as Elon Musk, it's about compute. And compute is the amount of sheer power and workforce that you have to use with these GPUs to create artificial intelligence. And even, like, there was a video we did on Dan Degen, which talked about Aether and AI. And there was a report from Andreessen Horowitz where he said that compute is so constrained that demand outstrips supply by a factor of 10. So if you can get something into that to actually make those GPUs work better, then take a look at those projects, and that you can figure out what that is.
Yeah. They think, it's fascinating, isn't it? Because all the power, all the energy that, say, Bitcoin mining needs, that is a drop in the bucket as to what AI requires, and everyone's sort of talking about, AI is going to change everything, it's going to enable us to do all these many things. And really, the first question we should be asking is, where are we going to get all the electricity to power these things? Like, this stuff just absolutely. I think to do like an AI search, like on Perplexity or something like that, rather than the standard Google search, I think it's anywhere sort of between 8 and 10 times more electricity needed. And here we are, just sort of clicking away. You're like, wow, it's there's a lot of infrastructure that needs to be built for this stuff.
It's got to come from somewhere. Good point. Electricity and infrastructure.
Yeah. Well, there we go. Gosh, we've been going for an hour. I must say, I was very impressed that viewer numbers didn't drop off when we started talking about chess and all the rest of it. It just shows that people, I think people actually prefer chess to crypto.
Maybe chess is more popular than crypto. Have we considered that?
We have not considered that. That's why, like, you got to transfer over your channel, Ben.
Yeah. What if so into the Chessverse, Chess Bureau, and Chess News.
Chess News. That should be the driest. That would be the driest channel of all time. Chess News.
I like to think that the chess space, when all the crypto people pivot to chess instead, we'll just end up longing for the days of crypto. The chess space will be such a bear pit, a snake pit, that we'll all want to go back to crypto.
This is true. This is true.
Well, that was great. Thank you, guys. I feel like I should go and learn how to play. I mean, I can play chess, but I think my ELO score is probably in the single digits. So I'm gonna avoid any game with Ben. But thank you, guys. That was great. Thank you, everyone, for watching. We will be back next week on Ben's channel.
Yeah,
I remembered.
Nice.
didn't screw it up. So we will see you all then. Rob, Ben, thank you very much.
Thank you, guys. Thanks, everybody.
Thanks for having us. We'll see you next week.
Yeah, and thanks everyone for watching. See you next week.